Megan, you've said before on this program, you're skeptical that there'll be a lot of additional growth because of this tax bill, sort of what Larry Summers has said. Is your view the same as we come closer and closer to a pretty comprehensive package?
So my view is the same. We might get slightly better growth next year, partly due to this expensing piece. So companies might pull their investment forward, but that doesn't mean that that will be sustainable. So we might get a boost briefly. But I'm sympathetic to Larry's argument that maybe animal spirits are a thing. I don't really believe in confidence fairies. I think that unless the hard data starts backing up the confidence data, the confidence just kind of peters out. And we are still seeing this big bifurcation between hard and soft data in the U.S., with the soft data looking great, the hard data not really looking great. It's possible that off the back of this tax reform, maybe the soft data will start pulling the hard data up, but I don't really buy into that argument. But that would be one way in which I'm wrong.
So, Mike, the consensus of most economists who look at it is with Megan and with Larry Summers. But there is a group of, if I can call them conservative economists, who've written a letter saying, no, they think it will trigger more growth than we think.
Yeah, and that letter caused a lot of consternation in the economic community because those who don't feel there will be growth, including Professor Summers, looked at the letter and looked at the studies that they said they were relying on and found that they had relied on faulty data and bad studies. And there doesn't seem to be any backup for this idea that you can get to 3 or 4% growth. The consensus of most economists is between 0.2 and 0.3% additional growth maybe in the first few years, but then you start to go the other way, and perhaps by 2025 you start to see some contraction because most of the stimulus programs, the tax cuts for individuals go away.
I brought this chart up in the last segment, and Megan, I wanted to get your take on it because it goes to what Mike was talking about. It's sort of the rotation we've seen out of tech into financials. The yellow line is financials, and the bottom panel here is semis and tech. Does that make sense on the kind of tax reform and growth outlook that you're looking at?
So it could. I mean, financials haven't done well in the past 24 hours in particular. But if you look at the effective tax rate for different industries, it's actually industries producing goods, so it's retailing. That has an incredibly high tax rate, telecoms as well. So those industries would do better from a lower tax rate, whereas industries with lower effective tax rates wouldn't get quite the same boost. But I do think financials, semiconductors should get some boost.